What happens when your mortgage loan forbearance ends? You've received notice that your forbearance period end date is quickly approaching. You're not sure what to do about this. Where do you start? Will you owe any money? If so, how much? And when is it due? The big thing to remember is that you're not alone in this. Many are currently grappling with the same question. They're finding out the expiration date for their forbearance agreements is quickly approaching, but not sure what to do. Stay tuned. We're going to discuss that next, right after this. Hello and welcome. I'm Bob Wybrick, Missouri licensed realtor with Coldwell Banker Realty Gundaker in St. Louis, Missouri since 2002. On this channel, I strive to provide viewers useful insights and tips on the residential real estate market. If these are topics you want to hear about, click that subscribe button and the bell icon to be notified when a new video is released. I publish a new video every Wednesday and you don't want to miss a thing. Now, on to the reason why you're here. Today we're going to discuss what to do about a forbearance when it comes due, including how to make the repayments, what you could do if you're financially impacted by the current economy, should you consider selling your home, and much more. The world we live in with the pandemic has made life financially challenging for many. If you're one of those who applied for and received a mortgage forbearance, you may find the forbearance period time is quickly running out. The amount placed in forbearance was not a loan forgiveness. The principal and interest placed in the forbearance period will need to be repaid. Repayments on a forbearance can appear differently depending on the forbearance plan with your lender. A few ways that you may be requested to repay the amount owed include, but are not limited to, full repayment as a one-time lump sum payment at the end of the forbearance period. Make additional payments with your existing monthly payment over a specified period of time. You will lengthen your loan term to pay the forbearance amount at the end of the loan term via additional mortgage payments. Obtain a loan modification which helps those at risk of default change their mortgage terms. Payment deferral, an option which allows you to pay off the forbearance amount when the home is sold or refinanced or at the end of the loan term. But what happens if you are financially impacted by the current economy and just can't pay the mortgage? It is important to discuss available options with your lender to be aware of the expectations of the forbearance repayment plan chosen. If you're like most who have applied for forbearance, it was so you could stay in your home. But in some situations, it may be better to sell your home, especially if the forbearance period has expired. You know you're unable to repay the missed payments and believe that you will continue to fall behind in payments. The reason I'm bringing this up is that with the current real estate market, home values have substantially increased across the country at the time of this recording. This means you could possibly sell your home, pay off your mortgage loan, and possibly have money left over. Now you're probably wondering, can I sell my home while in forbearance, or if a forbearance was previously given, but I still owe money on it? The good news is, there are no restrictions imposed by forbearance on selling your home. You will need to make up any missed payments on the forbearance time, so expect to see that amount come out of any proceeds from the sale. As long as your home can be sold for more than is owed, including the mortgage balance, forbearance payment, real estate commission, and other selling fees, you should see no harm to your credit score. This will be useful in the event you wish to purchase another home. However, if you owe more than the market value of your home, whether in forbearance or not, you will have to work with your lender to do a short sale or deed in lieu of foreclosure. The foreclosure process can be very expensive to the lender. They may be willing to do a short sale, which means they will take less for the home than what is owed on it, or a deed in lieu of foreclosure, which means they will take ownership of the property. A short sale in real estate refers to when a financially distressed homeowner sells their home for less than what is owed on the mortgage. The lender needs to approve the short sale process first. When the home is sold, any proceeds will go to the lender. The lender has the option of forgiving the balance owed by the homeowner or file a deficiency judgment requiring the homeowner to pay all or part of the difference. After a short sale, you may be able to get a mortgage loan after a minimum waiting period of 4 years, less time with other loans such as FHA, VA, or USDA. The short sale record may remain on your credit report for 7 years. Deed in lieu of foreclosure. This is an option used by the homeowner to avoid foreclosure. Here, the homeowner deeds the collateral property, aka the house, back to the lender in exchange for release of all obligations under the mortgage period. This is usually taken as a last resort when the homeowner has exhausted all other options, including loan modifications or short sale, and has accepted the fact that they will lose their home. After a deed in lieu of foreclosure, you may be able to get a mortgage loan after 4 years. Again, less time with other loans such as an FHA, VA, or USDA. The deed in lieu of foreclosure may remain on your credit report for 4 years. Foreclosure. This is the legal process by which the lender attempts to recover the amount owed by taking ownership of your home and selling it themselves. This may happen when the homeowner misses a certain number of payments or is failing to meet the terms of the mortgage agreement. After a foreclosure, you may be able to get a conventional loan after 7 years and less time with other loans such as, yes, you guessed it, FHA, VA, or USDA loan. The record of foreclosure can remain on your credit report for up to 7 years. Now you know what to do about a forbearance when it comes due, how to make repayments, what you could do if you're still financially impacted by the economy, and should you sell your home. I hope you found this information useful and informative. For more real estate information, watch this video next, 8 Steps to Selling a House. Step 1, hire a listing agent. Be sure to hit the thumbs up button, leave a comment, share it with a friend, and subscribe to my channel. Thanks for watching, and as always, make it a great day.